So let's begin. Letter N. All right. First off, entering and exiting a trade, it starts off with the mindset. The mindset of what? How to think before you enter a trade. All right, let's get that straight. First off, what you're going to do, you have your brokerage account set up. You have your balance. You have all your watch lists created, right? So now what happens? You have to break down the stock search. How do you break down your stock search, Andre? Easy. You look for blue chip stocks. In your blue chip stocks, maybe it's stocks that you know. Maybe it's stocks that you heard of. Maybe it's stocks that you're familiar with. Either way, you go through the blue chip stocks one at a time. What you're looking at? What you're looking at is price levels. What it used to be, what the price is now, what the price was last week, what the price is going to be next week. All right? You're looking at price levels, what you think it's going to go to. All right? And then the next thing you're looking at is the news, if there's news on it. Always be familiar with the earnings. Always be familiar with when the earnings are coming up. Earnings report. It comes up every 3 months. It's very important to have it on your calendar when the specific stocks have earnings report. Every stock has it. All right? Earnings report. And also news like, inflation news and interest rate rules and things like that. You want to keep up with that as well. All right. Chart views. When you're drawing your markings, if you're going to draw your marking, if let's say you're doing a long-term trade, you're going to look at a yearly chart view. If you're going to do a day trading, you're going to look at an hourly chart view. Now make sure you get a pen and a paper and you jot this stuff down. Make notes of this. This is very important. You need a pen and paper, notepad, or on your computer, and you make handy notes. All right. For a day trade, I generally use a day chart to project where the stock is going, and then I'll break it all the way down to a 1 hour chart, all the way down to a 15-minute chart, so that I can know where I'm getting in at. So either way, short-term trade, usually I use a day chart. I always reference the day chart, and I use Yahoo Finance for charting. I don't use no other program. I mostly use Yahoo Finance for charting, and I use my watch list on Charles and Schwab. That's the account I have. I also have yearly chart views. So this is all covering the mindset. If you want to go long-term, years out, you can use a monthly chart view, a daily chart view, or a yearly chart view. That's going to give you a broad perspective of what's going on. We're going to go through all of that, but this is how you should be thinking before you make your first trade and every trade following that. All right, let's go on. Let's move on past this. Okay, so the first thing you have to recognize is sideways movement. You have to see it. All right, you're going to see that often. Every slide is going to show. You have to what? See it. All right. What do you have to see? Sideways movement. Before you can make an entry point, you have to recognize sideways movement. How do you know what sideways movement is? Easy. I'm going to go over this. The videos explain it, but I'm going to just refresh you on this. This is a barrier at the top, and this is a barrier on the bottom. The way you do that, you always zoom out. Always zoom out and hold on. Let me see. Let me get a different color here. All right. So when the stock goes up to about 37.50, got it. So you have to see it. Now, if you recognize that, It's full screen. Okay, here we are. So if you recognize, when this stock goes up to 37 and 50 cents here, and it goes up to there, it barricades, it stops, then it drops back down. Where's it stop at down here? $33.50. This is per share, price share. This is share prices. So when you look at the chart and you see a barricade here, and then you see, it does whatever here, and then it stops here. This is how you recognize sideways movement. Here we go as well. Now it's not always exact on, but you will see a sideways movement. This is the first thing you must find before entering a trade. If you don't see a sideways movement, if you don't see a sideways movement, guess what? It ain't time for you to enter that trade. All right. So if you don't see a sideways movement, a resistance, and a support, if you don't see that, guess what? That means you don't enter the trade. You have to see it. All right. Let's go to another one. Once again, scroll out. Now you don't want to be zoomed in too much. You want to be scrolled out enough where you can see at least, months out. You know what I'm saying, or weeks out, or where you can see a pattern. Here we go again. Let's draw this out. I'm gonna do it with purple this time. If you see here, it stops at what? $27.50. It stops right here. Then it drops down. You can even make this a barrier if you want, because it stopped there. If you want, it's up to you. But main thing is, wait, let me erase that. So main thing to understand is it stops here at what? $27.50. Then it drops down where? Here at what? $22.50. And then it goes back up approximately here. Where? $27.50. So you see your support, what you call your support, and your resist. Support is the bottom. See right here? Went up. It hit that support again. Then it hit the resist again. Playing around. Hit the resist again. Hit the resist again. So guess what? Where's your entry points? I'm going to show you. This is the key. This is the key, ladies and gentlemen. So pay good attention. Pay good attention to the support and the resist. I'm going to show you how to enter. If you want to buy a up or a call, if you want to buy the share or you want to buy a call, this is your buy point. Where? 27.50 or 27.55. 27.55. Why? Because the pattern is showing this, and you must understand, once it hit that barrier, if it goes beyond that barrier, this is what you call an uptrend, ladies and gentlemen. This barrier right here. So this is your buy point for an uptrend. What about a downtrend? That's easy. If you want to short a stock, or what you call a put, this is your buy point. Once it passed this area, that's a downtrend. You got it? So how that works is, once it breaks that bottom barrier, it retests. It always retests, and then it continues to downtrend. That's usually how it works. I don't want to say always, but typically, more usual than not, it always retests. Same thing with the uptrend. Once it breaks this is your buy point. It breaks that, it retests this area to make sure, and then that's your uptrend. So where's your buy points? Your buy points is the barriers. Your buy points is what? The barriers. Once it breaks these barriers, that's where your trend starts. Everybody understands? We're going to do another example. All right? That's where your trend starts. So if that's your buy point, I want you to understand, to exit a trade, I'll show you that next. But once you got your buy point down, then your stop loss. Stop loss means if the trade is moving against your position, you withdraw your money. Minimize your losses. I'll show you that. So here we go. Say you buy here. The stock's going here. Your stop loss could be here, because this means a trend change. So you can make your stop loss at $22. That's your stop loss. So let's put a red mark there. So this is your stop loss right here. If you enter here, this is your stop loss. Everybody understanding me? Follow me. Or you can make your stop loss here if you want. It's up to you, depending on how much you want to risk. You can make it here. You can make your stop loss there too. Because sometimes what happens is, sometimes it'll break that barricade and it'll come back here and test this, and then it'll break back up. So sometimes it varies, but you can set your stop loss. If it's a trend change, like if it's a trend change, you can set your stop loss, but you have to predetermine what you're going to do before you do it. All right, you have to know exactly where you're going to get in. I'm going to get in at 27.50, and I'm going to exit if it drops to 24.50, or I'm going to exit if it drops to 22. No matter what happens, that's what you do. And the key is what? You have to see it. You have to see what? Sideways movement. That's the only way you can get into your position. We're going to do some real life examples, okay? You have to see what? Sideways movement. Period. All right? That's how you enter and exit. That's how you set your stop loss. Now, I'm going to show you how to set your profit points. Now, the profit points is based on what happened previously. So the profit points, you set a level based on what you saw before, what the stock did before. So I'll give you the perfect example. You have to see it, right? Okay. So guess what? Let's do this. You know what? Let's use a red. I'm gonna use a one you can see. I'm gonna use yellow. All right. So sideways movement. You see it? Let's do this. This chart isn't the best friend. Don't have the best personality, but as you can see, it went here, barricaded, right? And then it drops here, stops, barricade, goes here. So I tell you what we're gonna do. This is what we're gonna do. And it barricades here. So we're gonna set the marker here. Sideways. Boom. Once it breaks that, it drops here. This is a terrible personality, this stock. So to set your profits, what you would do is you would look at your barricades. Let's say a stock is doing this. Let's say the stock did this, and then it started going sideways, right? So the way you set your profit is you will see the sideways movement, which is most important, and then your buy-in point will be what? Around here, because once it break that barrier, where is it going? Up. Your profit taking is going to be set based on the history of what the barricade is. So your profit point is going to be where? Right here, because that's what the stock did on the back end. So this is your buy-in area around 120, and this is like 140 up here. So guess what? You could choose your profit taking right here at 140, because that's where the last barricade was behind it. Am I making sense? So if it goes sideways, you got to look at the history of where it was behind. It's going to show you barricades. It's going to show you supports and resistance. And that's how you choose where you're going to take your profit. Sometimes you can take it beyond that too. It's up to you. I'll give you another example really quick. I'll make this real simple for you. Here we go. As you can see, you have a resistance here, and you have a resistance here, right? So if a stock goes here, let's say this is your buy point, 65, right? Let's say 65 is your buy point, right? So if 65 is your buy point, because it's beyond the resistance, clear above it, because it's not always exact, but it's around. So if this is your buy point, you're looking at the back for where's your profit taken. So as you can see, where was the last resistance at? Last resistance was, well, this is under your buy point, so the last resistance is here, right here. That's the resistance, right? So if this is your buy point, you could take your profits around 75 just to be careful, just to be safe. Just take it around 75. How do you know where you're taking your profits? Because what it did back here. See what I'm saying? It's human behavior, ladies and gentlemen. Same thing. It's the same thing. Now, if you don't see it, don't F with the stock. Or I say, don't mess with the stock if you don't see it. If you don't see that, if you don't see the sideways movement, move on. You have to see it. All right? You have to see it. Let's go on. Let's go on to the next one. This is what you call an uptrend, ladies and gentlemen. If you went through the course up to this point, you know what an uptrend is. It's where it's clearly going up. It's not breaking a downtrend. Now, for it to turn into a downtrend, I'll show you. For it to turn into a downtrend, I gotta keep this mouse straight. But in order for it to turn into a downtrend, see that barrier right here? This will probably have to come here. It's gonna test. They have to start coming down. That's a trend change. All right. But anyways, this is an uptrend. I'm gonna show you how to enter. If you see an uptrend, when you zoom out, if you see an uptrend, if you see it, what are you looking for? Sideways movement right here. I like this. So this is sideways. You see the barrier? You see right here? Boom. That's not straight. I'm gonna make it straight. See that? So where's your buy point, ladies and gentlemen? Around here. If you want to short it, Where's your buy point? Because you could short a stock too. So for options traders, it's put. Put means down. For traditional stock traders, it means to short. You short the stock. That means you're betting that it goes down. If you want the stock to go up, you just simply buy the share. If it's options trading, if you want to go up, it's a call. All right. So where's your buy point for shorting the stock or put? Right here. All right. Because if that stock breaks here, if it breaks this barrier, it's gonna test and then it's gonna drop. If it break this barrier, like it did, what did it do? This is a real chart. You're looking at it. What did it do? It broke the barrier. Oops. Sorry. All right. So what did it do? It broke the barrier. It tested. Then it went back, tested again, and went back. Now these test points, you could rebuy your position. You can add to your position on these test points if you want. So when it tests these points, you can rebuy your position if you want. That's how you add. So on the uptrend, you add incrementally. On the downtrend, you pay your put, or if you shorten the stock, you pay it and then you take incrementally. On the uptrend, you add little by little. So say you got $5,000, you add in 2,500. When it retests, add another 500. If it retests again, add another 500. That's how you do it. Or add another 1,000. You add incrementally when you're riding the uptrend. You add incrementally. Okay. So as you can see, your buy point is where? Right here. And then it becomes what? A uptrend. Got another barricade right here. All right. Now, if you want to take your profits, you could say, hey, if it goes down 5% or whatever, I'm gonna take my profits. You got to choose your profit taking points based on where you project the stock is gonna go. All right. So as you see, it went all the way up here. Okay, so that's how you enter and exit your trades. You have to see it. You have to see what? Sideways movement. You have to see the support, just the bottom, and the resistance. You have to see that. Before making any trade, you have to see the sideways movement. All right. Here we go. Blue chip stocks. So how do you shortcut and find where to go? How do you shortcut and find where to trade? How to trade? Where it's at? How do you do that? Easy. Blue chip stocks. That's how you do it. You search your blue chip stock. And in your blue chip stock, you look at the chart views. All right. So let's keep going. All right, what we got coming up is called options trading. This is a very, very good chapter. The options trading world. This is what turns you into a professional investor. Options trading is very important. Why? Because it opens up your investment styles. All right. Calls means to go up, or calls is bull market. Call means bull market. Puts means to go down, or what you call bear market. All right. So the bull market means what? Up. Bear market means what? Down. Call means what? Up. Put means what? Down. All right. It's going to be 6 parts on this next upcoming options. It's going to be 6 courses, 6 curriculums that I got for you, from beginner to uh, expert trader. It's going to explain to you how to become an expert trader. It's going to break it all the way down. All right, all the way down. From part, it's 6 parts. 6 parts. Sorry for my handwriting. I'm writing with this mouse. So, anyways, yeah. So it's going to be 6 parts. All right. So in those 6 parts, it's going to break down what options trading is from scratch, from simple beginner to how to become a good options trader. So, all right, let's move on. Mastering options trading strategies, 6 parts, like I just spoke to you about. 6 parts, 6 sessions, from basic to advanced level. Right here, options trading, very important. This is very important in order to becoming a professional investor. Very important. Why? Because options trading opens up your style of investment. So like I was saying, it's 6 parts, from basic to advanced. This is really going to change your life. Pay close attention to part 1, part 2, part 3, part 4, part 5, and part 6. They are all particular to investment styles, and it goes over from terminology to contracts to strike prices and everything else. It's really going to open you up. I've been an options trader. I made over close to $200,000 in 1 month. You know, so understand options trading. Okay, so options trading is very important. All right, it's gonna open you up. All right, so pay attention. Also, in the screen, it is also in the training. It's gonna be 2 videos. There's only 2 videos at the end, but these videos are very effective. It's gonna talk about the trading psychology, the psychology of trading. This is also important. So in the next few letters, up to Z, you're going to get an options trading, 6 parts, and you're going to get 2 more trading psychology uh, videos or lectures. I'm going to teach you how to properly think when trading. Very important. Okay. That concludes N, the letter N. Please understand the psychology of trading is very important, and I want to welcome you to options trading and opening your style up to become a professional investor. God bless.